Hello,
Yeah.
everyone. This is Jake Wicker
Yes.
with Real Estate Aholics, man. What's up, guys?
What's going on?
What's up,
Not much,
fellas?
man. That's nuts.
Good deal.
We,
Good
we,
deal.
we back at it again, guys. Hey,
So,
last week, man, I got some positive. Information back from people, man. They
oh
they
yeah.
learned a lot from that episode. I did too. I
That's
did too.
good.
On
Yeah,
title
man.
attorneys, that is.
Yeah,
Okay.
yeah, man.
Closing attorney.
Yeah. So I think I learned so much, man. I want to try to put something like that together, man, and do what we was talking about
Definitely.
as far as the virtual title company,
I'm
right?
with that.
Yeah,
I
man.
like I
Yeah.
told you, we just need to
Yeah,
get together and collaborate, get schedules aligned, and
yeah,
and start really going deep diving as far as position and strategy and ideas and all kinds of things. I mean, everybody can definitely lend a piece of value to each uh to the whole situation, so it's just us getting together and aligning. That's it.
yeah.
Yep.
So, but even so, I think that probably really kind of going in detail of the title company stuff, man, is something we have to kind of get together offline and really kind of really go through every single thing, man. Hopefully you guys can jump on the Patreon group and we can kind of mine that thing really all the way out and see
Yeah,
how we going to attack this thing, man. And you guys let me know when you guys are available and we can make it happen. We definitely can make it happen. So, all right. So what's
All right.
going on, everybody? Everybody just logged in, man. I appreciate you guys jumping on with us. Please like, share, and subscribe, man. If you hear something that you like, hit like, man. Right? Subscribe. If you hear something you don't like, do the same thing. And if you like it or you don't like it, shoot a comment out to us, man. But today we're gonna talk about real estate investing trust, which is a REIT, right? So, all right, we're gonna jump right into this thing, man. But the first thing too, man, jump on the Patreon. You guys want to come on and help support the channel, definitely jump on there. There's going to be a lot of great videos that's going to be on there as well, man, that really kind of breaks down everything kind of what we're talking about. So I do that through the week, give you some extra content. Definitely jump on that, guys. So, all right. So,
definitely, 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 definitely.
oh, I messed around and put that wrong thing in there. So the question is, what is a REIT? Okay, hold on 1 second. Let me put that in and redo this one here. Hope it's short, right?
Yep. Here
So
we go.
what is a REIT, guys? Have you guys got a chance to
We've
look that
seen.
one up yet?
We've
Yeah,
seen.
I can
Yeah.
talk about it.
Okay.
Hey.
So
Yeah. So a REIT stands for a real estate investment trust, and what it basically means is it performs kind of like a mutual fund, or perhaps like an ETF, where an investor can actually buy shares like they can a stock or like they can a mutual fund. And so they purchase a share, and then they anticipate again some sort of return on that, either in the form of an increase in the share price, or perhaps this particular REIT is maybe paying back some dividends, so you can get some dividend income on them as well. They may or may not be liquid, meaning that oftentimes, depending on the nature of the REIT, and this is where you always need to read the disclosures and the perspective on these to find out if there's a certain lockup period. So if you want to invest, say, $20,000 in the REIT, you may not be able to sell that to regain your $20,000 plus whatever the stock price might be for the profit for a certain period of time because it's been locked up. So it's another way for people to invest in real estate where they're actually investing their money. I would almost say on a passive basis, because you're giving your money to somebody else to manage. And then the underlying assets that are part of that REIT are generally real estate. They could be mortgages. They could be a couple of number different things, but they're typically in the real estate realm of what that underlying asset is. So it's real important as you look at those, and you can type in, a REIT or a real estate investment trust. And there's listings in there of various ways to get in there. If you have brokerage accounts like a Fidelity or a Ameritrade or those type of things, that's how you would access those. Is through those various broker type stuff, because again they often trade very much like a mutual fund or a ETF. So
Okay.
absolutely.
yeah.
Okay. All right. So
Yes.
yes, sir.
Welcome.
So here's the question. I mean, here's the, when I pulled up, right? So a real estate investment trust is the company that owns, in the most cases, operates income producing real estate REITs own many types of commercial and real estate, including office and apartment buildings. So that's
Right.
kind of like their definition of a REIT, right? So yeah, you're absolutely right, Mr. Cody. Hey, so we got a new co-host here, guys. Let me introduce Miss Debbie. Vic, how are you? Can you hear me? We was having we was
She
having
still
issue with
seems
the
to be
sound.
struggling. There must be something in her settings on that.
Not letting
Okay,
her microphone or
Yeah.
speakers work.
She said
okay,
her
I see
mic
your
was
shot.
still not working.
Yeah. Hey, can somebody respond to us and give kind of help her out a little bit in the back channel
You
there?
just
You
did.
don't
Her
mind?
mic is not
Okay.
working.
Okay. All right. Yeah, hit her up on the back channel if you could.
Mhm.
See
I
if we can
think
help her out.
I think that this type of investment is it's good because it allows an individual to get in at not a much of a cost, right? You know, some people you can get in at 500, depending. That's why Cody was saying you got to be careful as to who is operating, right? Who is
Thanks.
structuring, who's getting it together, because there are some people that have actually gotten money, uh, have lost money because it became some kind of scam or some kind of situation where they couldn't get their money back. And sometimes and then when you pay out dividends, right, which is really quarterly or by however they do it, some people don't even get their money back. And you know, so it's just you got to really trust that individual that's operating this establishment, right? And do a lot of vetting as far as what that uh what that individual REIT is actually doing and their purpose and their intention.
Yeah. Definitely the person that's in charge of it should. Um, I mean, if you choose to invest into a REIT, you should definitely make sure the person who's in control of that definitely have a history of it, right, of running the REIT. Yeah, right. So it's just like a regular any investment, man. You got to make sure that you understand what's at stake, because you can lose your money in it. But based on based on information that I was able to pull up, man, it seemed like it's actually something that really produces, man, if you pick right, though, right? So it's a lot of ways. Of course, you can lose money in anything that you do as far as investing, but there's some things that's a little bit more secure because in a sense, you're kind of diversifying it over a bunch of real estate properties instead of just one. So I
Yeah,
mean,
it
so
does
you
allow
get
you to spread the risk, and
yeah,
that's
yeah,
that's one of the things, because if
Mhm.
the REIT has owns 35, 50 properties within the REIT itself, then you've spread that risk over that 30. So if you have one go sideways, two go sideways, then the rest of the properties will carry that. So there are some advantages there, but it's just like any sort of investment you're going to get yourself into. You've got to do your own due diligence. You've got to figure out who the underlying partners are. One of the things about REITs, because they are traded as a security, you can look up information under the what's Edgar site, EDGAR, which is the way you can access any sort of security that is listed with the Security Exchange Commission through the Edgar site. In fact, my fund, the fund that I operate, is listed on the Edgar site too. So you can go look at BCF Fund One, and you can find all our information there as far as when we filed with the SEC. So that's another part of your due diligence that you can manage with looking up any of these investment opportunities if they're
yeah.
treated like a security.
Okay, Ms. Deborah, are you there?
I am.
Oh,
Awesome.
welcome, welcome.
Welcome.
Welcome. So
Welcome,
one thing
welcome.
we didn't do, like we always do, I forgot to do it this time, man. So everybody introduce yourself, tell them where you're logging in from, what do you do, all that good stuff.
All right. So I'm Jarrell. Here out of Atlanta. I mainly focus in brokering loans for several hard money lenders that range from funding single family properties, multifamily properties, and commercial. Uh, so typical range of deals and loans that I facilitate are fix and flips, refinances, or straight up turnkey purchase rentals. So if you have any questions regarding getting a loan or investing in real estate for your for your portfolio, just give me a call. or just hit me up with that email address underneath my face, bpiquickloans@gmail.com.
Jarrell, go get it too. Jarrell the guy, for
Yeah,
sure.
man.
That's my guy
Thanks,
right there.
I've got that one figured out.
Absolutely.
So I'll go ahead and go next since I did
Okay.
open my mouth on this one here. I'm Cody Cox. I'm up in the Portland area. I'm up in the northwest of the country, so out on the West Coast. And I am basically a note investor. I don't invest in real estate directly. I invest in the paper secured by residential real estate. I am a fund manager. I've raised, I have as I talked about a few minutes ago, a Regulation D 506B note fund, which allows me to raise capital from investors. I'm able to pool the money. And then in that pool of money, we purchase notes, primarily performing notes, but every once in a while we'll do a non-performing note. And the income that comes off of those notes, we repay back our investors. We have in our current offering, we are paying an 8% preferred, no, excuse me, no, it is an 8% preferred rate, and then we get a little slice off the top of that in the way of a management fee, since Bridge City Factors is the management company of that fund. And then if there's certain overages, if we get like huge returns on certain situations on a quarterly basis, we split those returns, those additional returns over and above the 8%. We split those with our investors. So there's a couple different, price points or profit centers in that particular type of business that I operate.
Oh, excellent, excellent. SJ is on you, brother.
All right. Hold on one second. My bad. What's going on, everybody? What's going on? Okay, so my name is Sean from S&J Property Group, as you can see right there. All right. What I do is I wholesale real estate. All right. I also teach it, and I teach other people to wholesale real estate. I've been doing it for 5 years. I'm out of New Jersey. I do Jersey as well as Alabama. So I just teach people the ethical way of doing wholesaling real estate, using that capital to be able to get you to be able to do other real estate possibilities. That's why I like the diversity up in here, right? Because there's so many things that you could do, and I use the wholesaling capital to be able to do it. I got investment properties. I might even get into some notes like Cody, whatever, right? So
Yeah.
it's just, you do have that ability to do that, right? So again, I'm out of Jersey. If you need to know anything more about me, you can go to S&J Property Group anywhere and find out. And any questions, hit me up.
Absolutely. So on you, Miss Deborah Vick.
All right. Hey, everybody. So they call me Debbie the Realtor, and I have been doing a lot more commercial than residential lately, but I do have some listings as well. I do luxury. I love single family homes. I love doing
Attached.
fourplex.
Attached.
Oh, kid, just kidding. And then some apartments as well, especially if people are looking for a certain amount of units. Recently, I have been doing more on my other hat. So I'm also a business professor. I teach finance, HR, marketing, business, the whole gamut. And then I do trainings for that, and I do business coaching. The goal for me is always just to make sure that I'm leaving a legacy. And so that means that anyone that I come into contact with, I want to make sure they leave better than they came.
Dope.
Nice.
Dope.
That's
That's what it's
dope.
about. That's what it's about, man. Well, welcome to the team. Welcome to the team, man. I'm happy to, definitely have you on. And anything you hear us talking about, jump right in there. All right. All right. So we're talking about REITs, right? So here's the question: how does they work? How does
Joe,
a REIT work, man?
Jay, how you missing? How you skipping you?
Oh wow! Well, I'll give me later on. But so okay, so let's do this then. So I am a commercial wholesaler. Is basically what I am. So, specialize. I'm just really just getting into syndication deals now with commercial. I will do a residential if and put it on my desk. I ain't gonna turn no money down, but I'm specializing in apartments. Specializing in whatever, everything commercial. Put it like that. From trailer homes to land, all that good stuff. I'm just getting into land as well. So, but yeah, definitely reach out to me if you guys have anything that can help. I don't care where it's at. Send it over to me. If I can get it done, we're gonna get it done. We're all gonna eat here, right?
Yeah, that's
So
what I'm
as you
talking
guys
about.
can see, we have people here do a little bit of everything. So if I can't get it done, somebody on here can get it done, right? So that's how we do it. That's
Strength
how
is
we do
up.
it. Yeah, yeah. So and I definitely like to work with you as well. So you're dealing with commercial stuff. So when it comes to real estate, that's huge. That's huge right there.
And I,
Appreciate that, SJ. I'm
well,
sorry. Say it one more time.
I forgot to say I'm based out of Texas as well.
Yep.
Oh,
So you're Houston, right?
H-Town.
H time all day. All right.
I'm about to start
Wonderful.
in Houston right now.
Absolutely. So how does they work, man? So you hear people talking about these risks, man. So how does that work? Um,
Mm,
what do? You just
period.
take a few bucks and put it in a pile and try to purchase it, or how does that work?
Does it have to be out of your 401k? That's typically how you invest in REITs, right? Out of some type of pension fund or 401k or money management professional doing it for you or some type of entity. Is that correct?
Well, not necessarily. I mean, in fact, I'm doing a little experiment right now while we're talking here is I'm just logging into one of my brokerage accounts. They have ticker symbols. So
Mm,
very much like a stock or very much
yeah.
like a mutual fund. And
Mhm.
I'm going to go into my regular brokerage account, type in a ticker symbol here. The one I'm going to look at is CTRE, which is Care Trust REIT. It looks like its 1 year performance is at about 16.9%. And the share price is $19.35 a piece. So I type in CTRE, it does come up, and it looks like from my brokerage account, which probably any of your guys' stock brokerage accounts, you can purchase a share or shares, probably 100 blocks, 100 shares in a block, and I can buy a share or my interest into this REIT very much like I'd buy shares of,
Okay.
any other sort of entity,
Okay.
Tesla or whatever you may want to be buying. So, uh,
Yeah.
so anyway, that's the way you can do it. So it's again, it trades on the stock market. It trades on this one trades on the Nasdaq, and so it's actually pretty easy. And one of you guys said it a little bit earlier. It's pretty easy way for somebody to get involved in real estate on a third party passive basis because you're not the one
Absolutely.
managing any of the real estate. You're
Yep.
just simply buying into this particular company who is managing a real estate and then conforming to some of the rules that the IRS has on what they can offer to be actually a REIT of some sort. So
And
So
then
I
when
know.
you
Go
go
ahead.
ahead,
Go
my
ahead,
bad.
SJ.
No, I was saying that because I particularly have money in ETFs, right? So and some of my the ETFs I have are real estate based, right? Um, so what I'm saying is that you don't necessarily have to own a lot of shares, right? You can do one or two, whatever is like you just said, $19, right?
yeah,
So it's like it's just a way in order, but again, you have to at least know what that ticket symbol, what they do, right? Like
yeah,
what's their goal or their whole entire backstory, right? So
yeah.
that
What's
you
their
can have an
approach?
idea, yeah, what their
Yeah,
approach is. So that's what I do too. Like I just don't jump into a stock. I like kind of get their
Yeah.
background and stuff like that.
Yeah. That's very important to know. Whatever you're investing in, it's
Mhm.
important to know exactly what you're investing in. But hey, I mean, it's a way of investing. Like I know Cody says he basically want to invest, man, and he don't have to worry about no toilets. You don't have to worry about tenants moving out and all that stuff. It's going to be ran by an individual, and I'm pretty sure they probably meet on probably a monthly basis and tell them exactly what's going. I don't know how they do that, right? So I'm just getting this myself, but it's passive with your hand off,
Right.
bro. But you want to make sure they're doing the right thing or whatever the case is. But this is a great way to invest, right? This is a great way to invest. A little bit of nothing. Like you said, $19. You said.
yeah. It's trading at 18.15 in after hours trading today. So I mean, roughly $19.
Wow.
And the way I look at these kind of things, and mostly when I do from an equity stock investing perspective, is I'll do, and this is introduces a whole new subject, but I'll do kind of what's the wheel strategy, because I want to look at things that are paying dividends, which this one here has a dividend being paid out at the end of this month, and then I also like to look at options. So I acquire stocks through an option purchase before I actually do it on buying the stock outright.
Okay.
But again, that introduces a whole new topic that we don't really want to get into tonight, I don't think.
Yeah. So, so is REIT, are they good investments, right? So, REIT is historically has been delivered competitive total. I can't really see my screen. Return based on high speed dividends, income, and low term capital appreciation. They have comparatively low collaboration with other assets. Also makes. Let me see what that says at the bottom. An excellent portfolio diversifier that can help reduce overall portfolio risk and increase returns. These are the characteristics of risk-based real estate investments. You guys get
and
that?
that makes sense. If you
Okay.
if you deal into a REIT that's real estate appreciates, right? So
So,
you're banking on the appreciation, whether that be the commercial building or that be the, whatever, that appreciation you are able to take advantage of, right? Because you're just not putting money. I think that there's a way of looking at it. When you put money into anything, whether it be a stocks or whether it be a REIT, that you're part of the company. You
yeah.
own something, part of that piece of that company. And if you own enough shares, you can actually be on the boards and actually sit down and make decisions based upon the amount of shares that you have. So it's a big deal, especially when it comes to like real estate, because again, that's why I love real estate. It appreciates. There's tax benefits, right?
Absolutely.
So
Absolutely.
it's just a great thing especially with these REITs now, to be able to look behind the walls and the curtains of that particular REIT, but at the same time, it's a low entry way to get into real estate too. It's just another area, just another facet.
Yeah. So let me make sure we put this in here. This disclaimer, man. Thank you, appreciate it, Jason. So this is entertainment purposes only. We're not attorneys. Know that we
No.
act like we're attorneys, right? So entertainment purposes only, guys. None of this. How do they say that? MCA is not reliable, and anything has to do with this. We're this entertainment purposes only. So, but yeah, you're absolutely right, SJ. You're absolutely right, bro. Appreciate that, Jason. Jason, hey, Jason out here, he working for us, man. So I appreciate that, brother. All right. So yeah, man, it's definitely you're absolutely right, man. Real estate investing, man, it's a different situation, bro. It's different, man. Anything you want to do, you don't like this type of investments, you can go to another route and still be able to do whatever you need to get done. You need to figure out what works best for you, and you go after that. You know, that's just it. That's just it there. All right. Any question about that one?
Not so much.
Well,
All
and let me
right.
just add one more thing here that I think is pertinent to it, because every one of us have to make a decision what our level of activity might be as we're doing real estate investing. I mean, you guys, from what I know of you guys are all very active real estate investors. You're the ones that are actually investing the capital, you're finding the properties, and you're doing all the work. So you're very active. But there's a group of people that want to invest in real estate, but they want to do it from a passive perspective. I mean, you have a lot of doctors and dentists and attorneys and people like that have some capital, but they don't have the time to go through and do the investment, the research, and the due diligence that a lot of us try and do. And so this provides a couple ways for those folks to get involved from a passive perspective, turn their money over to somebody else. And obviously we all like to raise capital from various investors to help with us. But again, as you guys, we talked about several times, hey Jay, good to see you.
What's up, man?
What's up,
What
Jay?
up, Jay?
Yeah, and
Right.
is basically you've got to vet the sponsor. And that's one of the things that I am very, very adamant about as I'm trying to raise capital for my funds, which again is different than a REIT, in that I want everybody to vet me to make sure that they're comfortable with me, because really your investment is with who that sponsor is. And that's really how you're going to know if you get your money back, as we talked about earlier, is that, does that sponsor have a good track record? Do they have a good reputation? And is it somebody you feel comfortable with, giving 10, 15, 20, $100,000 with, to invest your capital with an expected return?
Yeah. So that goes to the question, at least to the question, man, how do you vet that person? What are some of the things you have to do to vet a person like that?
Well, you can actually run background checks on folks, which I think is a good thing. Probably you guys have access to that, or you can run, certain kind of reports. Obviously, just do some internet sleuthing, do some searching, online searching for things like that, and hopefully that particular sponsor has some references you can call who can break down and do some other things. So you can call those references and ask questions about other folks, how the experience has been. And also, as I mentioned, that Edgar site, which is, again, an SEC site. So if there's been some violations, they're going to be reflected there in that Edgar site. So that's another way to take a look. It's you doing your due diligence, not only on a property, but on a person. And there's, you can find those ways to do that.
Yeah. And understand, so we're talking about REIT. So when it comes to wholesaling, right? Wholesaling is the entry level into real estate investing. This is on another level here, right? These REITs is something a little bit different. So if you're looking to get involved in this, do your due diligence, guys. It's important. When you put
Yeah, I
money into
mean,
anything, make sure you do that.
yeah, I mean, like Cody was saying, there's a lot of people that have money, right? That don't want to be a landlord. Like, how we raise how we raise private capital.
Absolutely.
We raise private funds, right? For people who, just want to be able to put their money into, where I'm going to start doing, where people can be able to put money into my rehab projects that I may come across that I want to take down myself, right? So I can get them a return, whether it be 8 to 10%, whatever the case may be, as a return. Um, Fast, right? But it's the same thing. Like, there's people that just don't want to be a landlord. They don't want to own real estate. They don't want to be a part of that process, but they know that real estate is where it's at. You know what I'm saying? So again, it's the same thing. If you feel like you don't want to do all that, there is that REIT that you can get involved with at a low cost too. And just, get yourself to be able to have passive income for yourself and be in real estate, but not kind of like let real estate control you, right? Like, it doesn't have to go that route. So, I mean, it's a good. I never did it. I'm not gonna lie. I never did it. This is actually my first time in depth understanding about what REITs are. But once I get off this live, I may have to. I may have to look at that.
You ready to go live? So I got a question. So okay, so this is kind of side note here. So how can a realtor get paid by directing people? Because I know you guys deal with investors all the time, right, Ms. Deborah?
Mm-hmm.
Right, so you know who got that money, right? But they don't want to put that money into a bank because they get less than 1%. So what are some of the things that a realtor can do to help get that person to maybe invest in the REIT and maybe get paid off of, or can you get paid off of? Can a realtor get paid off of it?
I would like to defer this to Cody because I feel like this is going to, it kind of goes a little bit into like a referral fee or something like that. But I liked what was said about having the funds. I have my older sister is a lawyer. My older sister is a doctor, and they have funds, but they don't want to have. They have houses, but they don't want to just solely be running around fixing things. And so, for me, I'm actually getting educated myself because this would actually be a great recommendation for them. And but I actually have never recommended anybody to do this. So I may defer it right back and say, what would be the protocol for that?
Yeah.
Well, so understand the nature of a REIT versus understand the nature of a commercial real estate agent.
Yeah.
Obviously, a commercial real estate agent is trying to sell a commercial property. And so anybody that buys that or invests in that is investing in the property itself. Whereas a REIT, you're just kind of investing in an equity position, just like you would a stock. And so they're unrelated. It's just that this particular stock, if you will, their asset base consists of maybe commercial real estate. So you don't have the ability to invest in individual property. You're investing in a company that is invested in properties. So there's really not a way for a commercial real estate agent to get a commission or any sort of compensation by directing somebody to pay to buy a REIT. The broker, the stockbroker who you manage that is like if you have a Fidelity account and you buy 100 shares of whatever REIT there is, they're the ones who are going to get the commission. And so there's not a way for there to be a crossover compensation on that. So from a real estate agent's perspective, it's probably not the right play.
Correct. Correct.
So
Yeah.
so let's say so probably you probably get realtors can get paid off of maybe a syndication deal, right? Because a lot of times you get paid off of you the person who bring a money person to that table. People wouldn't pay you for that.
Well, and it kind of depends
No?
on the syndication, Jay, because if it's a
Okay.
regulation desyndication type things, there are rules in there because it's not a full-fledged application to the SEC. They're not going to allow anybody to pay any commissions out of that. But if you do a regulation A plus an A plus, then you do have certain type of agents involved, but those are mostly going to be, folks that have their Series 7 or Series 63 type licenses.
Yeah.
Rather than a real estate stuff. The way that probably a commercial real estate agent might get paid on one of those things is they find one property and there is a group of people that get together who combine their money, they form a limited liability company, and all of those 5 or 10 people are part of that LLC. And then they purchase that real estate. So it's not a syndication. It's not registered anywhere. It's just a group of 5 buddies, 10 buddies getting together. They're pooling their money and they're buying that piece of real estate. Then the agent that represents them will get a commission at that particular point in time.
Gotcha.
So that's the difference you're going to see there.
Yeah, gotcha. Okay.
Relations, and kickbacks and all that stuff. It's easier just to do the referral, and then they trust you. They make money, and then with that money, you say, "Now you go buy something."
Right.
Absolutely.
Yeah.
Okay. Huh. That's interesting. That's interesting. All right. So here's another question here. What's up, Jay? How you feeling, bro?
Hey, man, everything's beautiful in its own way. Busted
Absolutely.
pipes.
Good day to be alive. Good day to be alive, brother. So, are there any downside to a REIT?
Downside to everything, Jay.
Absolutely.
There's a downside to everything.
Let's talk about it. What is something you see maybe can be? Well, I know a lot of things can be red flag, but what's a couple things that jump out to you guys?
People jumping out the window too quick. Stop jumping out the window. Relax. Do your due diligence. They see something, they about to jump, right? So I think that's one of the things, not being able to say, all right, I got this little piece of cash. I want to get into this REIT. I want to get into this like real estate thing. And Jay told me about this REIT, or Cody told me about this REIT. I don't even care about it. They should know they're professionals. I'm a jump. But you still should trust and verify, right? Trust but verify. So you have to be able to do your due. I think that's the thing. I think
I'm a jumper.
Even no. Jumping is good.
That was
awesome.
Jumping is good if you got the cables to hold you and support you, right? You gotta have something. You just don't
I
jump
got a
out
little
the
bit
window
of
like that.
so,
Yeah, come on.
Yeah.
You got a little bit of something. You ain't gonna fall down. Like you gonna make sure you got a cushion when you fall. So it's just that, with wholesaling too, there's a lot of people that get into this business, they just jump, right? I'm ready to jump. And I don't mind that, but I believe that you have to have some type of foundation and learn what it is. Go back and do your due diligence. I think that's what it is. Lack of due diligence. That's one.
But you learn so much when you do that. I did a 6-figure investment about 10 years ago, and I lost my money, and it hurt, but it made me go backtrack every single step and say, what did I do wrong? And what could I do better next time? And I wouldn't have done that if the first time I flipped my money, I was like, oh, okay, this is good. Let me do this again. And at the time I had liquid capital. I was finishing up college, but I was a celebrity bartender. So I had back in the Making It Rain days where they were just throwing money because they didn't care. made everybody physically responsible. Thanks, Jay-Z. But
The good old days.
actually
Yeah.
do. And so I was like, oh, okay, I can invest in these tri-stories. So I'm gonna start building in the city, but I don't want to do it because I still got to work. I still had a full-time job because I, always have like this full-time thing happening. And then I lost my money, but I didn't lose it right away. It was a slow burn. And the guy kept pausing me. Oh, okay, it's coming. I just need to take this to put over here. And I started to see like all the mistakes I made. Now I ask a lot more questions. I'm more cognizant of, hey, that little twitch in your eyebrow just let me know you're lying. But it was good. And so sometimes those hard knocks are really important because it does give you a different vantage point that you need for.
Yeah, absolutely.
I
That's huge. Yeah, on some things I'm jumping out the window and I'll build my parachute as I'm falling, but some things I won't. Right?
Yeah,
So
yeah.
I'm kind of like Jay on that as well.
Yeah, I
Because
like
a
to
lot of
have
times
my
that's not how you're
scars,
gonna
man.
learn.
I
What'd
like
you
to
say?
have my scars, right?
Yeah, like say for instance, like with this REIT, right?
Mhm.
Or like I don't know anything. At first, before we got on the show, I was like, I kind of like, I don't really know too much about it, right? But now with a little bit of something, I was like I said,
Yeah.
when we get off this live, I might do a little research about it, right? So it's the same thing. I mean, I do my due diligence, but I don't let it give me. How can I say it? I don't let it get me analysis paralysis. I don't stop. Like, if I'm gonna do it, if I'm doing my due diligence, I'm going to take that action, of course. But
Yeah, I just
some
bought some
people,
right now.
yeah. So let's see how it works, bro.
Absolutely.
There's two things I think that could be potential pitfalls in purchasing a REIT, but to preface those two things is the first thing you've got to understand that your approach, your mentality is like you're buying a stock or a mutual fund. It's not like you're buying real estate. So that's the thing. It trades differently than real estate trades. So the two things that I think could be, if the underlying asset that is owned by the REITs or the assets are real estate, which they should be, are we in a market where the real estate values are increasing? Are they going down? What is the mix? Are they meeting all the requirements that they need for the SEC? Because there are certain requirements for a REIT to be able to achieve in certain levels as far as how much money is invested. Is it in cash? Is it in real estate? Other things like that. But the other aspect, I think, again, is just like any other stock that, or really what I wanted to say had to do with liquidity, again, because some of these REITs will tie up your money. And so if you're going to buy into buy 100 shares at $18 a share, that's only $1,800, which is not a big deal. But does it trade liquid right now? Can you sell that tomorrow, or are they going to tie it up for a whole year? Because oftentimes there are some lockup periods. So you have to know what you're going into when you go into it, and then figure out, am I going to be, inhibited on liquidating this if I have to? Is the market in a place? Are they all geographically located in the same place, or are they diversified throughout various parts of the country on their underlying assets? So that's the potential pitfalls I see, has to do with, can you get out of the stock if you see it going down? And if it's tied up all in real estate, are those real estate assets actually appreciate in value? Or are there some potential that they actually can show some decrease in value? So that's the two things I would think are most important.
So
Absolutely.
what about the rate of return? Like what's an average for that?
Okay, actually, I got it down at the bottom for you. Well, the average return on the retail is about 12.1. Maybe
So
the
is that
numbers
like
give
a
or take.
shopping center and those kind of places, malls or
Yeah,
things?
retail.
Bingo.
Yeah,
Okay.
yep. What
Yeah.
what up, Lenny?
What up? Hey, real
Lenny.
talk.
Lenny.
A REIT is literally how I first got into real estate, right?
Let's talk about it, brother. We know you come. Come on with it, bro. Come on with it.
Hey, before
Now,
you get on your rant, Lenny, hold on for a minute, okay? I don't want to be disrespectful. Deborah, glad to have you.
Thank you.
Oh yeah, absolutely.
All right, and Lenny, now you can have the next 20 minutes because you're gonna go
Okay.
I didn't want to forget about. I didn't want to forget about Miss Red Dress up there. It keep hitting me, so I wanted to make sure I show my respects.
Look,
Thank you so much, Jay. Deborah, nice having you.
hey,
Deborah.
All right, so yeah, we need your expertise with that, bro. So you jumped into the game on a REIT. Talk to us about it.
So in Cleveland, where I'm from, all the malls is owned by Simon, right? Simon Property Group, right? Simon owns damn near most of the malls in America, actually. So the Simon Property Group was the first REIT that I got into, right? Because I wanted to know. I was watching this show. It was talking about abandoned malls and stuff, right? That was on YouTube. They always going through abandoned mansions, abandoned malls, or whatever. So I was dude kept going into malls that was owned by Simon, and I'm like, damn, Simon owns all the malls, but then they also own big apartment complex, 200, 300 unit, commercial real estate. So I was asking my uncle, I'm like, how can we wiggle to all these malls falling down? And he was like, well, the malls might be falling down there for you, but Simon's still building commercial real estate. If you want to get into that, just go ahead and take you a few dollars and invest to the REIT. And I'm like, what is a REIT? He like, it's basically like, stock, basically a stock, you know what I mean? Like Cody was saying, basically a stock. And instead of you investing in one property, you know what I mean, you invest in a whole portfolio, right? When you invest in that REIT. So yeah, that's literally how I even knew anything about real estate, is I bought a REIT with it, which I thought was a stock. You know what I mean? But it worked.
You might have actually.
It worked. Huh?
What was the price? I don't know if this overstepped my boundary, but roughly what was the price that you paid before that stock in that REIT?
Yeah, I think it was. Yeah, then I think it was $17.
Yeah, it's kind of what we just talking about too. Yeah, okay, about 17. Okay, cool. All right, excellent, man. So let's jump into this next one, man. So how do we make money with? We can't hear you. We can't hear you, Lenny. Can you guys hear Lenny? Can't hear you. Can't hear you.
Something happened, Lenny. We can't hear you.
Yeah, we can't hear you.
This always happened to Lenny, man.
He's upgrading his Android.
Yeah. All right. So how do they make money, right? How does a REIT make money, guys? Right. So we're talking about these 12.1 retail returns, right? Percentage returns. So how do they make money?
Depends on the company.
Mm-hmm.
Depends on the company. A lot of them will invest in either commercial. Some of them do single family now, but most of them will invest in commercial and then give you a percentage of whatever the returns are. They'll hold those properties, they'll renovate those properties, they'll improve those properties, and then eventually they'll sell them, and then that's how you'll get the money back into that REIT to reinvest into something else. That's how they're paying their dividends. But again, it's all about the structure of the company that you decide you're going to put your money into.
Excellent.
And that's exactly what I did, but I just didn't do enough research. So I probably should have did more research.
Let me ask you a question. What's the difference between, I guess one says a stock. Okay, I understand one is stock. But you have these funds, like the Tulsa Real Estate Fund. You have all these other funds. Like, what's the difference? They all both do dividends, right? They all kind of collect money, right? So, like, how do you make a person understand the difference between a fund, like a mutual, like Bernie Madoff, or or a what's it, Tulsa Real Estate Fund, like between as far as and versus a REIT?
Well, it depends on if they're publicly traded or not. Some are publicly traded, which puts them on the stock market, which is, what I was doing a few minutes ago, and then what Cody was actually doing. And then you have some that just call themselves funds, but they're creating a group as if all of us decided, hey, we're going to create a fund, and we all put our money into that pot to invest in the real estate that we want to invest in.
I think Mr. J Morrison, his was publicly traded, if I'm not mistaken.
Yeah, it was.
Yeah, I think his was. So I think it was a REIT. I would assume it was a REIT. He just named it that, right?
Okay.
That's what I would think.
Because I know that he takes that money
It was
and he
basically
buys
a REIT.
other. Mhm.
Yeah.
Okay.
It's the same concept on both sides.
Yeah.
Just depends on what they want to call it.
Gotcha.
Yeah, there's a difference in the structure. Obviously, the structure of a REIT is we can go in and buy shares like you can if you're going to go buy a stock or an ETF or a mutual fund. But the fund that you refer to, and that's what I do, is I'm a fund manager. I've collected money and raised money from capital from investors and use that pooled amount to buy, in my case, promissory notes. To buy real estate is a kind of a form of a syndication, where I'm raising capital to pool the money to buy a single commercial property or a multifamily type property. And it's generally buying one asset, and the returns off that asset are paying the dividends and the returns back to the investors that are part of that. So it's a little bit more closed than what a REIT might be, because the REITs are generally available, as Jay said. It's just they're on the open market. You can buy shares of them, just like you would, again, trade a stock or a mutual fund or an ETF. So there's some differences in there in the structure and how those lay out.
Yeah. All right. So here's what I pulled up here. So the REIT makes their money through mortgages, underlying real estate development, or on rental incomes once the property is developed. So REIT provides shareholders with steady income, and if it's held longer, growth then reflects the appreciation of the property it owns. So absolutely, it's kind of what you said a little bit earlier, Jay. What was that thing? I think it was you, Jay.
Yeah,
So,
I mean, that's just a elaborate way of saying
yeah,
what we've all been talking about, right?
Yeah.
Thanks, Google.
That's so true. So true. They were listening to us.
Yeah, we appreciate that.
All right. So here's a question I think we all kind of thinking about. So we're going to invest this money into a REIT, right? We agreed to do that. So here's the question, man. Can you pull money out of a REIT? Yes or no? I guess I gave the answer though, but I should have did that. So can you get money out of a REIT?
You can, depending on what you want to risk when it comes to paying taxes. Okay. And then also depending on, again, what kind of REIT it's actually going into. Because you can put money into an actual REIT, but then they have stipulations on how long you have to hold your money in that REIT for the investments that they're going to make.
Gotcha.
Precisely.
So if you decide
a date of maturity, or like is it normally a time frame that it has to stay in there?
Sometimes it is, because they've set a point to where you might be investing into this REIT, and a part of your contribution is going to be into this one particular property. Mm-hmm. And they're going to have to wait for that property to do whatever it is that they've got on their schedule for that property, so that they can either sell or refinance that property.
Sure. Okay.
So based on what we talked about a little earlier, man, as far as like the average return, man, the REIT, it has been proven over time, man, that it's a great thing to invest in from the limited information that I know, or looked up or did research on, or whatever the case. It would seem like it was it outperformed a lot of other stuff, man, out there. What do you guys, when you guys looked it up, man, what do you guys see? Did you guys kind of come up that same deal?
Yeah, for the most part, it is, especially the ones that you're looking at where they're doing mostly in all commercial real estate. There's more businesses that are opening, right? So they've got to have the commercial property to be able to operate and do that. Public storage was a big one for a while, right? It's still commercial, and a lot of those REITs were getting into the public storage and turning over a lot of money and holding those properties.
Yeah, I have a small, well, I guess you could say it's like a pamphlet, right? Not an ebook, but it's a pamphlet of commercial stores. How to invest in it.
Yeah.
That I did a couple years ago. So I need to pull that stuff up, man. But yeah, man, definitely, man. Storages. Think about it, man. People, if they buy all this stuff from Amazon, you got to put it somewhere, right? So they put it in these storages or whatever the case. Or you move to a big house because of whatever situation and move to an apartment. And most people want to get rid of their stuff or their toys and put it in storages. And it can be sitting there for years. and
Big
we're
Birdie told me it's
faithfully
about to
paying.
go up again.
Yeah.
Because
Absolutely.
we're about to see an uptick in foreclosures. So storage is going to go up again.
Yeah.
You know, I have one of my two people I know, they have a lot of land out here in Texas. You know, everybody has ranches, and they
I
have
don't. Well, not yet anyway.
well, I mean, I don't have a ranch. But I only got land because I'm hanging around with all these people that have, 500 acres, 1,000 acres, and I'm just going, how? And they're like, well, it was passed down in my family. And they're like, you didn't get any. And I'm like, I was kind of on that other side where
they would have had a nose down then, back.
Yeah.
Yeah, I feel you.
But what it did was it taught me how much opportunity. So they took part of their land, a few acres, and they built storages on it. And they are making hand over fist because it's low maintenance. All they have to do is just build it and then have the people go and put their stuff in there. And I was like, that is such a clever idea. That is so I can see how it can definitely have a return. So I would
Also,
love
we've done
people are
that with
doing
a land.
RV parks like that too. They're doing their land with RV parks
yeah.
and stuff like that, and making some serious money doing that.
I
Absolutely.
bought some land just for that.
Where is it?
Oh man.
Yeah.
Where is it, Deb?
Navasota.
Where at?
Navasota.
Oh, okay. Okay.
Yeah. Because they're building the Aggie Expressway, and so it's going to go straight through.
Yeah.
And if they do end up doing that high-speed train, I had some 401k that was sitting that was doing absolutely nothing, and I couldn't move it because I wasn't in the industry where I could still have it as a functioning 401k.
Right.
So I just pulled apart that one, which I didn't merge earlier, and I just bought some land, and it's already almost doubled in value already.
Cool.
Yeah.
Did you borrow the money from your 401k?
I just pulled it.
Why?
Because it was sitting.
You should have borrowed it.
Well,
I have a better idea. If you rolled it into a self-directed IRA with the proper custodian,
Wow.
and then you can use that money to invest in that, and then all the returns go right back into that self-directed IRA.
Right.
And that is not a taxable event. So
yeah.
probably if you pulled it out like you did, it became a taxable event.
Yeah.
It is now cash money now that you can use however you want to. But, anytime you leave an employer and you have that 401k that's sitting there, roll it into a self-directed IRA.
I still
hopefully, So that would be a smarter move. And there's a great self-directed IRA company that's in Texas.
Quest.
Quest Trust. So I know the boys there that run that, and they will set you up so it all becomes tax stuff, tax free or tax deferred, depending on if it rolls as a traditional or as a Roth.
Yeah,
Tell
they got
real estate aholics right here, baby.
Tell them Jay sent you.
Yeah,
Tell them Jay and Cody sent you. You'll get a discount. You'll get a discount.
Yeah, they got an office in Houston for sure. So yeah,
absolutely, yeah. Houston, Dallas, and Austin.
So 401k is what is pre-tax, right? The Roth IRA is post-tax.
Correct.
So would they let you roll that into a self-directed IRA?
Yes, because I've got two self-directed IRAs. One is a traditional, one is a Roth.
Without you paying any penalties at all?
No, no. That you don't have to pay any, because it's, especially if you have the IRA companies do that transfer. So if it doesn't pass through your hands,
right,
then there's no question that you didn't touch it. So if you were to open up an IRA with one of these self-directed IRA companies, they will work with whoever is the holder of the 401k, and then it's just a direct transfer, and that does not become a taxable event for you.
You did change my life, man.
Right.
Almost got a tear right here, bro.
That's why you hired me, Jay.
You changed my life.
So
Deborah, I want to hear what you said. Yeah. What's that?
This is very good, because like that, when I left out of industry, and I moved into, when I came back to Texas, I I had a 401k here before, and then I had, at the time I was in my 20s and I think part of my 30s, and I was putting the max into my 401k because I
Sure.
still bartending. So my salary, I just saved all of it, and I paid all my bills with my flex money. And when I had this money in this account, I moved to Arizona. They started me a new one for some odd reason. And then when I came back to Houston as a professor, they put me in whatever the Texas, it's a TRS, Texas retirement system. So
Sure.
now the money's frozen
Yeah.
and it's just sitting. And I'm like, what the heck? So I pulled one of them out, bought some land, and I still have a whole nother chunk that's literally just dormant. I can't touch it.
Yeah, call Quest.
All right.
Yeah.
Actually, let me go to my email.
Wow.
I got it.
Okay. This is huge, man. This is
Yeah.
real estate aholics, man. Getting this good information. So we all learning here. All right. So a few of these questions you guys already answered already, man. I was going to ask you about. I kind of like the lowest you can put into run. So you said somebody said like $14 or something like that.
19.
19.
Yeah,
Okay.
19.
Okay.
Yeah.
Yeah.
We talked about what could go wrong with it. So we talked about that already.
Mhm.
And we talked about the passiveness, right?
Mhm.
Sorry,
Of it.
Deborah.
Yeah, that's huge. Y'all done went through my questions already. So okay, so here's a good one right here.
Networking meeting right now.
Say it again.
No, I was saying Quest is having a virtual networking meeting right now.
So like we talked about that, they're one of the best sectors, right, for performing in inflation, man. So I think it's a good deal, man. It's worth taking a look at, especially now that I know that you can possibly roll in your 401k into your
Right.
Roth IRA. That's crazy. That's crazy.
Yeah,
So I definitely gonna look that up.
We've done that for. I got one that just turned 2, but then I got another one that's due in June. But we've set them up with IRA and put money in there. So as we invest in real estate, then that money goes back to their IRA tax free.
Yeah. No, man. So all you people out there, man, who've been switching up jobs, right? And you got that 401k over here and one part over here and over here. Go on, combine and put in your Roth IRA, man. Use that money towards and do some investments with it, man, and hopefully build up a nest egg, man, to retire you.
Right. So you can use the same dollar twice.
It's the same twice.
You use the same dollar twice. The interest that you're paying back on is going to be lower than any bank would have even given you, and you're paying the interest back to yourself.
Yeah. Yeah.
Big facts.
Imagine
Big
flipping
facts.
homes in an IRA.
That's what I do.
Yeah.
Yes.
All that goes right back to the IRA. You have to be careful about self-dealing and things such as that. There are some limitations on it. But if you structure it right and get it set up and understand what you can and can't do with that, it can be highly profitable. Very powerful.
The best thing that we did after dealing with 1031s.
You know, Jay, you might want to write this down for a future topic for one of these meetings, is how to invest your IRA money.
Yeah. And is that better than a 1031 exchange? Like what, I would love to be a part of that conversation.
Yep. So you said 1031 exchange?
Yeah, we were.
Yeah, I mean they both
using the
1031 exchange is the same. I mean, they're all tax avoidable, right? That's what people do, except
well, with the 1031, I have to identify a property.
Yeah, you got that
within
right.
a certain period of time.
Exactly.
But with my Roth IRA, I don't.
Yeah, I would never.
And you don't got a time. And you don't got a time. You don't got a time frame.
Right.
Either,
Right. I don't have a time frame, and
Yeah.
I don't have to worry about it being equal to or that same value.
Right.
Yeah.
To keep doing that.
Yeah. And a 1031 exchange value is when you're dealing with taxable money. It allows you to postpone paying taxes on capital gains.
Yeah.
I would never, ever do a 1031 in an IRA. There's just no reason to do it.
Okay.
Yeah. From my understanding, I thought they was coming after that 1031 exchange, though. I thought maybe it had did something to it by now, but I guess it's still in full effect, though. But that make more sense what you were saying, though, Jason.
Yeah, I mean it's really not. Most people think of it in their head as an account, but it's not even an account. It's just a tax code.
Yeah.
Yeah.
IRS code 1031.
Listen, This is a lot of game that's been spent on this thing here, man. I love it. I love it. So let's do this. Last week, say it again.
Glad I could join.
We definitely appreciate it. Last week,
you got a wealth of knowledge, man. I love it.
Hey, man, I tell you, man, record this stuff.
I've forgotten more than I know.
Jay's the man. Jay's the man.
But I see it coming back. I see it coming back.
It brings stuff to the forefront that I was like, man, I didn't even remember I knew that. So let's talk about it.
Yeah. Last week, man, we talked about what does it take to open up a title company, right? And we sat on here for an hour and a half and we mined that thing out, man. And I think it was something beautiful. So if you didn't get a chance to listen to the podcast last week, please do. What we're gonna be doing here, we're gonna jump on the Patreon. Hopefully, we'll work today. I guess tonight or tomorrow we'll work out a time where we can jump on there, right? And some of this information ain't gonna give out to the public because we're gonna actually do this thing. You know what I'm saying? So, and we're gonna do it not a brick and mortar, but a virtual one, right? Because think about it, everything right now, you close deals virtually now, right? You ain't gotta have a brick and mortar now.
Go.
Right, so here's one of the questions, right? And I'm gonna give this game out to the people who listen, right? So we was like, what would make us stand out as a title company? I think it was SJ. What you said, open on a Saturday, if I'm not mistaken.
Yeah,
so
that was actually Jarrell. Jarrell actually said Saturdays is the best. I can't take credit for that.
Okay, hey, yeah. But you said, what if you open up on a Saturday, man? Think about how many title companies will come to you and close their deals if you open up on a Saturday.
Yep.
And, we have, of course, mobile notaries and all that good stuff. I'm actually a mobile signing agent as well. But they all around the United States. This is everybody's doing them now, right? But we able to close them. But there was a couple more things that we talked about, man, that hit on point that nobody's really doing. Go ahead, Jay.
I wasn't on the last meeting, and I apologize for that. But one of the other things that I think we should add to that is making an RMLO for each one of those as well. Because those of us who also do creative deals and we need to do loans, right? Because we're doing either a wrap or we're creating owner finance and we're charging interest. We can't do that as an investor, but that RMLO virtually can write those up for us.
That's dope. So yeah, we definitely got to have that. That's a great add-on right there. Great add-on.
That's so my man Jay.
We have underwriting, right? We talked about that. We talked about the, of course, the notary signing companies or whatever case out there. We talked about that. The secure lines, right? The secure. Cody was talking about, we can do stuff online, close these deals, but under secure lines where people can't. He talked about that. We even talked about the companies that we can use.
Yeah.
We talked about roughly how much it would cost to open that up. What would that look like? How much everybody invest in and how, all that good stuff. We really went all the way through it, man. I was like, wow, bro. Go ahead, Jay.
Let's offer transactional funding as well.
That's huge. That's huge. Man.
That's huge. All in one? Absolutely.
Yeah.
Absolutely.
So, Miss Deborah, you here right on time.
You know what?
Look at her. She write down stuff.
Let me tell you, I was telling Jay, my man Jay right here, I was saying, all it takes is us to be aligned, bro. To be honest with you, we have the look, Cody, we already got private funding right here over here. He's ready to fund us, right? And also got private lenders too. So I don't think it's a matter of money. I think it's just a matter of alignment. Yeah. You know what I mean? That's it. I don't think it's a matter of money because we can get the money. $500,000 ain't nothing. It's just we got to be aligned. That's all.
That's it. We talked about a quarter. So 250,000.
A quarter million.
Right?
Yeah, quarter million.
250,000. Right. So
quarter million.
I mean, if let's say we collectively came up with 125K, right? There's investors. As long as we have skin in the game, there's some investors that will loan that other 125, probably at 9% or whatever the case is, with some upside to it. It wouldn't be an issue getting that done. But that's Jay, literally one deal for us each.
But let me ask Jay Sims, how much do you think? Because you wasn't there at the last meeting, and we missed you. We missed that cape.
Yeah, we did. We definitely missed that. So what do you think? Roughly, I'm not saying estimate. Zach.
How much do you think we would need to get started?
So it's
We
not a
already
brick and mortar. It's not a brick and mortar. This is a virtual thing that we're doing.
right, virtual, right. Comfortable.
I'm not gonna. It's dangerous for me to throw that number. It would be dangerous and reckless for me to put a number out there without sitting and looking at this, because there's gonna, even though we're doing it virtual, there's still gonna be some overhead that needs to be looked at, especially when it comes to you're expanding and trying to do all 50 states, and so. Yeah, to get it started. I mean, hell, we can do it with $500 if you really want to ask.
I agree. I agree. I agree, bro. I definitely agree with that.
And you can make one of those transactions happen immediately. The issue that we're running into is that we won't have the staff counsel in place, and we won't know the fees for that, because an attorney would have to be involved in some of those. And so we would need to have either staff counsel or an outside counsel to be able to help us with some of those closings. And we have to put a fee with that as well.
Yeah, absolutely. Absolutely.
It would be reckless for me to throw a number out there. I mean, because starting a business, that's easy. We can put a name on the thing and then put the business out there. But there's other aspects. What state will we start in first?
Or even what county?
And exactly. And what county that we're going to start in first, and then trickle from that, because our fees will also have to change based on our territory that we're actually in.
Yeah.
Okay. And then there's other regulations that we have to look at as well. Will we have to register in certain counties and states in a way that will allow us to be able to operate within the modicum of elbow room that they allow us to without getting in trouble?
Right. Yeah. All right. Yeah.
So
first thing is a business model. You'd have to come up with a business model, and everybody that's going to be involved in that, you'd have to outline what their specific roles are. So we don't have, a couple, 3 people at the top that are, arguing with each other because the roles were not defined. There are other aspect that we talked about last week or 2 weeks ago had to do with finding the right underwriter. What are the fees and premiums that the underwriter is going to charge? Right. You can probably get into it for a very nominal number, especially if you're going to do it virtually. But as Jay was saying, there's a lot of things that have to fall into place as part of the business plan before you even made those kind of steps. Yes, sir.
But if we're loaning the money, then there's a possibility also as well that we can cut some of those fees that typical title companies are charging.
Yeah, well, and that's part of the business plan,
right?
Because
we were talking about that. Yeah,
because the title companies that I'm aware of, don't get involved in the lending aspect of things. To me, those are 2 different business models. So you just kind of have to figure out how you would roll those into one. And again, are there state requirements? Are there certain other requirements that have to keep those things separately?
Right.
Or are they looked at as a potential conflict of interest? So those are all the things that the business model, as you roll that out, would explore.
Right, which is what I was getting at, because we might have to have the title company be one name with those managers, and then have the lending portion of that be another company name with those managers as well. Yeah. And where would that principal office be that's going to operate all of that?
So what I'm gonna do, man, I'm gonna send that video out in full to everybody. And then what I'll do is just tell me, I'll pick about 5 dates, right?
Yeah.
Everybody tell me what day kind of works for them, so we can all kind of meet up on that day. And that's kind of really, maybe take an hour or 2 to really kind of mine it out, man. And let's see if we can get started with that, man. I think that's something we definitely can do. We all deal with title companies.
Else, man. You got my wheels turning over here, Deborah. Don't be laughing. So, we also should look into the possibility of looking to see if there's title companies in some of the areas where we want to be immediately, and see if we can actually do takeover. Because you can turn that brick and mortar into virtual, get rid of the brick and mortar, which could be an asset that we could sell if we've purchased it anyway, and then go virtual from there.
Yeah, man. Yeah, it really disguises the limit, man, for a nominal fee, right? It's a little
we're already
put our
there.
heads together. We good to go. We good to go. So I send that out tonight.
From owner finance, and just take it.
Absolutely, absolutely. So let's do this. So, Miss Deborah, can you give us the real estate state of the union? What state is the real estate in right now?
So real estate is very it's
Oh,
hospital.
let me blow you up. Let me blow you up. Right. Let me give you the stage right quick. Hold on one second. There you go. There you go.
So so real estate, as far as the Houston market goes, we are actually only decreased by 3%, but we have an uptick of about 4% coming up. And one thing that's happening is that people are actually migrating here in droves. So I just had a very nice property that was sold, and with that, and so with that, I was able to see how so many people that were interested in the property actually came from, different states, whether it's Nevada or California, New York. I just moved one person from New York moved here, and then she subsequently invited four more of her family members to move here because they get so much more for their money. Yeah. And so, the market here is good because we don't have state taxes, et cetera. But you go to a place like California where people are moving fast and furious. And so it's going to depend on the geographic location, whether it's a suburban area or whether it's rural. And also, what is the market? What's the employment market looking like? And so for metropolitan areas like Atlanta here, they're stabilizing. But for other places such as California and New York, you're seeing a change.
Is it a buy or sell market here in Texas right now?
In Texas, it's a buyer's market. The market right now is about 25 to 30 under asking on average. But if the house is pristine and is priced right, it's still going to sell. Average days on the market is about 63 days. It did go down to 59 days, but it's still averaging around there. So about 2 months for homes to go off the market. I have been setting the expectation a little bit different. I just listed a house. Actually, I'm listing one today. And then I listed one last week. And with that, I have to give them a different conversation I was given before. Before I was like, oh, don't fix anything. Don't even worry about it. Nope, it's gonna sell. Now I'm like, you might want to shampoo that carpet. You might fix it. And so it's changed, it's shifting, but we are putting a little bit more work in, but the results are still there where Houston is still selling. And I'm doing a sale in Mississippi right now, random. And what I'm finding is that that market has pretty much stalled. It's dead. And I have a hoteler where I'm able to do some properties in Florida, and the challenge that I'm having out there is they have a market for increase, but it's only a certain class. And what they're doing is they're gentrifying areas that have been known for low income, and now it's gonna boom. So there's a market out there as well.
Absolutely. So how, if somebody's looking at this and they want to reach out to you, how do they get in contact with you?
So I have a website, deborah.vick@garygreen.com. I'm also on Facebook, Deborah Vick Real Estate. I have an Instagram, a Twitter, a TikTok. You just name it, I got it. And also, my email is deborah.vick@garygreen with the E at the end of green.com.
Okay. And you also on this podcast called Real Estate Holics, I think it's called.
Yep, Real Estate Holics.
Okay.
Professor Vick Quick Tips. And so I talk about finance, I talk about business, I talk about marketing, and I talk about lived experiences and why it's so important. And I just give quick tips.
Dope. Welcome to the team, man.
Were you on the last phone call, Deborah? Were you on the last?
I was not. I was recommended for the call, and they reached out. So
all right.
Well,
welcome.
Yep, absolutely. So go ahead. Go ahead, Jay.
No, I was just saying, I just appreciate her. I don't even know her yet, but I do.
Yeah. So she does, like I say, the commercial stuff, man, and also residential as well. So definitely hit her up, man. You guys see something in her neck of the woods, somebody looking to sell something, definitely reach out to her.
You want to sell this commercial building I got up here in Dallas?
Let's do it.
All right, I'll talk to you.
All right.
Yeah, absolutely. All right, guys. So, hey, I will be sending everybody email tonight, man. We're gonna set this date up, man, so we can mine our way through this title company deal here, man. So, everybody, tell them how they reach you, all that good stuff. One more time, how they reach you.
Let me just do mine because it's real quick, okay? Because I'm not on any of that other stuff. Just call me. Okay.
Absolutely.
Is that .com?
972-220
There it is.
8104. Okay. That, or you can email me. Okay, but I'm not gonna do the email. And I got all the other social media stuff too, but I don't know my handles. So just type my name in. You'll see my logo. You'll
there
know
it is. Absolutely. Eyes on you, SJ. You're on mute. You're on mute.
I am. Okay.
Yep.
Yes, Coach SJ here. Coach SJ from S&J Property Group. That's my company. You can catch me everywhere. My handle is S&J Property Group. Very simple, right? If you want to get in contact with me via email, it's snjpropertygroup@gmail.com. I do, like I said, one-on-one coaching. I'm trying to steer away from that because it's getting overwhelming. So I want to do like group coaching instead. So it's much easier. So again,
I'll help you with that, SJ. I can help you.
Yeah, it's over. Listen,
You need a virtual.
wholesalers,
It's a lot.
wholesalers is they ask you, it's like I said, it's overwhelming. But anyway, you can catch me snjpropertygroup@gmail.com. I'm on all social media platforms. I'm even on TikTok. I'm not on LinkedIn. I'm sorry. TikTok, Instagram, all those. You can catch me. And I also got a YouTube channel, S&J Property Group, where you can get tips on how to wholesale real estate. I teach that intensively. So catch
need
me.
to be
Catch
on
me.
that.
Catch.
I
Yeah,
want to be on there
man.
with you, man. Let me know.
Jay knows I do my thing.
Absolutely.
So
I'll
anyway,
be
you need to
checking you
come
out.
in, yeah, you gotta come in and let's get together. Like, I
Okay.
believe in diversity. I love this diverse group here, because we all have one common goal, and that is to not only build wealth but actually to deliver it to the people. That's what we do. Deliver it to the people.
We're problem solvers.
Yes,
Yes.
sir. On you, Mr. Cody.
Well, the best way to get a hold of me is with the email that shows there, cody@bridgecityfactors.com. Portland, Oregon is known as a bridge city. I think we got 11 of them. I'm not going to give you my phone number because I'm on the West Coast and you guys be calling me at 6 or 5 o'clock in the morning. And so I won't be doing that. But that's the best way to get a hold of me. And I'm pretty responsive on that. I still have a full-time day job, which, again, you guys are going to help me get out of that. And I appreciate that very much. But I fully appreciate being part of this group as well. So you guys bring stuff to me that, I need to know. And hopefully I can impart some things your ways as well.
Good to have you too, Cody.
Absolutely,
thank you,
man.
Jay.
Absolutely.
Thank you.
Let me give a shout out to Mr. Lenny. He fell off here, man. Lenny, man, we always appreciate you, bro. Mr. Jarrell. I think Jarrell had to do something as a money guy. He had to do something as well. And Johnny Leverage, man. I don't think you guys got a chance. Some of you guys have got a chance to meet him. But he'll be getting on here pretty soon as well, man. And hey, you know me, man. Reach out to me any way you can. And Jay Wicker, I'm everywhere. So hit me up, man. Join the Patreon group, guys. That's where it's all going down. All the stuff that we ain't gonna talk about, that we gonna talk. This is where you get it on the Patreon group. So I'll send you guys the link as well, man. Hey, man, salute you guys, man. Another one in the books.
There we
Another
go.
one.
Another one.
Another one.
Before we get off, Jay,
yes,
do you have an insight on what the next topic is gonna be?
You know what? Mr. Cody just dropped some stuff in my lap here. So let me see. We was talking about what were we talking about here? What we had?
Self-directed IRAs. Investing in real estate. Yeah.
1031 exchange. We talked about that as well. And it was something else. I don't think I wrote that one down. But whatever you got, man, I'm definitely all ears, brother.
I thought we were going to talk about the quadrants. I don't know if you was that the quadrants.
Oh, for the Rich Dad Poor Dad
business, yeah. Because I thought I saw that on there, and I was like, oh, that's we're going to be okay. Gotcha.
When I posted that, I was thinking about Cody when he said that. I'm like, man, that's why I want to get to that. I think it was the I or whatever the case is. So
right,
we definitely can talk about that. Okay, we definitely can talk about that.
Different quadrants, yeah. That's what's up.
Absolutely. And what do you say, Jay?
Oh, I didn't say anything. I was just asking.
Okay. Yeah, if you guys think of anything, man, definitely reach out to me, man. Let's see what we can do. The whole thing is to bring,
I talk about anything.
absolutely. The whole thing is to bring this content, man, out to the people, man, and hopefully they can feed their families with it.
Yeah.
So.
Next time I'll have a haircut.
No, you good, brother. All right,
You good, my man.
Me
I
too,
appreciate
Jay.
it.
Me too.
you guys be easy.
All right, now.
All right,
All right,
peace.
all right.
Blessings on all of you.
Blessing you as well.
Bye, everyone.
Appreciate it. Thank
Bye-bye.
you too.